So, are you a US person married to someone who isn't a citizen and lives abroad? If so, you already know that US taxes can get, well, a little complicated. The default way the IRS treats your situation is almost certainly costing you money. But here's the good news, you have a choice. Today, we're going to break down that critical choice and the one key tool you'll need to make it happen. Let's dive in.
All right, here's our game plan. First, we'll tackle the main problem you're facing. Then we'll look at the big choice you get to make and the major catch that comes along with it. From there, it's all about the ITIN, what it is, how to get one, and the mistakes to avoid. And finally, we'll wrap it all up with the key questions you need to ask yourself before you do anything. Okay, let's jump right into part one, the non-resident spouse problem. This is all about the default tax situation that the IRS puts you in right from the start. Let's get right to it. If your spouse is what the IRS calls a non-resident alien, meaning they aren't a US citizen and don't live in the States, the tax code automatically assigns you a filing status. And trust me, it's almost never the one that saves you the most money. That default status is married filing separately. And yeah, it's pretty much as bad as it sounds. You hit higher tax brackets way sooner, you get a much smaller standard deduction, and a whole bunch of valuable tax credits, forget about it. Things like education credits are just off the table. What you really want is to be over in that married filing jointly column. That's where you find the lower tax rates, the much bigger deduction, and access to all those key tax benefits. Sticking with the default means you're basically leaving money on the table. So, how do you get out of that costly default status? Well, the good news is you're not stuck. The tax code gives you a very important choice to make. And this isn't some kind of shady loophole. It's an official option right there in black and white from the IRS. You can formally elect to treat your non-resident spouse as a US resident. Now, this is super important. This is only for tax purposes. It has absolutely no impact on their immigration status. Think of this election as the key that unlocks a much better filing option. And let me be crystal clear here, this election is everything. It is literally the only way you can file a joint tax return with your non-resident spouse. Without making this choice, filing jointly is just not possible, period. But as you might have guessed, this powerful choice comes with a very significant trade-off. And understanding this is probably the single most critical part of this entire decision. Here it is, the big catch. When you make that election to file jointly, you are agreeing to report and potentially pay US tax on every single dollar your spouse earns, no matter where in the world they earn it. That salary they get from their job in their home country, yep, that now has to go on your US tax return. Let's look at a quick example to see how this works. Say you earn $80,000. If you file separately, that's all the US taxes, just your 80 grand. But the moment you choose to file jointly, your spouse's $50,000 of foreign income gets pulled in. Your total income subject to US tax skyrockets from $80,000 to $130,000. Now your final tax bill might still be lower because of the better rates and deductions, but this is the calculation you absolutely have to run. Okay, so let's say you've done the math and filing jointly seems like the right move. How do you actually make it happen? Well, your spouse needs a taxpayer ID number. And since they can't get a social security number, they need something called an ITIN. The best way to think of an ITIN is as a simple tracking number for the IRS. It's for people who need to file US taxes, but aren't eligible to get a social security number. That is its entire purpose. It's just a number to process paperwork. And it is crucial to understand what an ITIN is not, because there are a lot of misconceptions out there. It does not give your spouse permission to work in the US. It is not for immigration. It does absolutely nothing to change their immigration status, and it does not help them get Social Security benefits. I can't say it enough. It is strictly 100% a tool for tax administration. So now that we know what an ITIN is, let's get into the practical side of things. How do you actually get one? The application process is very specific, and there are some serious pitfalls you need to avoid. Here's the deal. You can't just apply for an ITIN on its own. It has to be part of a package deal. First, you prepare your joint tax return, the Form 1040, and you just leave the spot for your spouse's SSN blank. Second, you fill out the ITIN application itself. That's Form W7. Third, you gather your spouse's proof of identity. And finally, you put all of it, the 1040, the W7, and the documents, into one envelope and mail it to a special ITIN office in Austin, Texas. It all has to go together. And now for the waiting game. You have to be patient with this process. After you mail everything, it can take about 7 weeks just to get a letter back saying they received it. The total time to actually get the ITN issued is often between 8 and 13 weeks, sometimes even longer. And get this, only after they issue the ITN will they finally start processing the tax return you sent along with it. Now listen up, because this is the step where most applications get rejected: the documentation. The IRS will not accept regular photocopies. You have to send either the original document or a certified copy you get from the agency that issued it. And certified is not the same as notarized. A notary stamp means nothing here. The easiest route is to use a valid foreign passport, because it's the only single document that proves both identity and foreign status. The big downside? You have to mail your spouse's original passport to the IRS, which, can feel a bit risky. All right, let's pull all these pieces together. We've gone over the problem, the choice you can make, the big trade-off, and the process to get it done. Now it's time to figure out what the right path is for your specific situation. At the end of the day, this is a cost-benefit analysis. You've got to run the numbers both ways. On one side, you have the potential tax savings from filing jointly. The lower rates, the bigger deduction, that's the benefit. On the other side, you have the potential cost, the extra tax you might have to pay on your spouse's worldwide income. The only way to know the right answer for you is to calculate which side is bigger. And that leaves you with this one final question. For your family, is making this choice to file jointly going to be a benefit, saving you money? Or will it become a burden, pulling too much foreign income into the US tax net? There is no one-size-fits-all answer. The choice is yours, but now you have the framework to make that decision wisely.